Hey everybody, I'm Mike DeSempoli and welcome to the Heritage Market Minute for Monday, September 27th, 2021. We hope you had a great weekend. Markets are starting off the week a little bit mixed. We have the Dow higher, the Nasdaq lower, and the S&P 500 is pretty flat. There's a little bit of pressure on the markets today from a rise in the treasury yields. After the Fed spoke last week, some market participants got the notion or extrapolated the assumption that the Fed is going to move very quickly to start to tighten monetary policy. We've said it many times. We could probably play the video on repeat at this point, but we continue to believe the Fed is on hold for this year. We don't think that there's enough evidence in the economy that we're far enough out of the woods that the Fed will feel comfortable to start becoming more hawkish or restrictive on monetary policy. But nonetheless, anytime that there is some concern or there's comments about the possibility of changes to monetary policy, it's sure to get the market's attention. This week, we will usher in the end of the third quarter and the beginning of the fourth quarter. I think most of us will be happy to see September in the rearview mirror, as we have really felt the challenges of the seasonality of the month of September here, whereas there's just increased volatility in the market and a lot more of exacerbated reactions to some of the market moving news that we have seen. Earnings season will start to ramp up yet again in just about 10 days. We'll get that first swath of earnings reports coming out, and as our assessment, we continue to see earnings growth far into next year. And in terms of what the market cares about most, aside from Fed policy and global liquidity, it is corporate earnings. So as long as we continue to see corporate earnings growing, we think this market will continue to grow. And it's not until corporate earnings will start to peak out that we think the market will run into some headwinds. Later this week, on Friday, we'll get some additional reports. Thursday morning on the labor market, looking at newly filed unemployment claims. That's always a report we look at each and every week to try to give us kind of an intra-month feel on where the trends are headed for employment. It'll be important to look at these reports over the next couple weeks, because now all remaining states have dropped the additional unemployment benefits. So for example, here in New York, it's a $504 a week base unemployment payment. The federal government was layering $300 on top of that. At one point early in the pandemic, it was $600 on top of that. But 504 plus 300 had New Yorkers claiming 804 a week if they were getting the full benefit. Now that 300 has gone away, the benefit has been reduced, so now we will get to see if that will actually force some people back into the job-seeking market and help some of the employment figures that we've seen over the last couple months, which have come in a little bit low. Still shown job growth, but not nearly to the level that we had hoped to see. So again, to reiterate, we don't think that this short-term move up in treasury yields is anything to be concerned about. This market is still primed and ready for the fourth quarter. We think we are perfectly positioned to take advantage of the trends that we think will unfold into Q4. So if you have any questions, reach out to us. Always happy to talk to you about the things that matter with your money. We'll be back later this week on Friday with the Heritage Market Pulse to wrap up all the action. Have a great Monday.